For more on this, we're joined by Naeem Aslam. He's Chief Investment Officer at Zaye Capital Markets. Welcome back to the programme, Naeem. Now, another whopping quarter for SK Hynix, but despite the strong earnings, investors just aren't impressed. Why is that?
Sure. Thanks for having me. I think, as you've mentioned right in the on the top of your show, it is more about expectations than anything else. It's not about the core business or the AI trade. Now, the expectations, if they have just run completely wild, and investors were expecting numbers much more higher, that is a different narrative. If you wanted to look at the company from a perspective of investment, but if you wanted to look at on its core value, as I mentioned earlier, and that is the only and the most important player in the AI memory chip space. There is no other company which has a higher margin, higher profitability, better product than anyone else right now in the space. And if you believe that the AI trade is about to stay here, or if you believe that AI trade is the future, and if you believe that AI is going to have the biggest growth in the future, then obviously this particular company and this particular investment opportunity should remain as a core thesis for your investment.
Now, more earnings are expected to come out this week from Wall Street giants Mag 7. What do markets want to see from them?
Yes, this is an interesting one, and we covered this particular topic in our research quite deeply because what we have is we have now warnings from rating agencies such as Moody, which is very much focusing on one thing, and that is the capex investment, the investment within the AI industry space that these particular companies have been making. And the concerns are that now, with the increase in interest rate, which again you kind of mentioned at the top of your particular show, that how the Kevin Wash or the Federal Reserve's policy is really going to impact the AI trade. So now the concern is because these companies that have so much borrowing in terms of the capex investment, any increase in interest rate could actually have negative influence on the company's stock performance, and that remains a concern.
Meanwhile, oil prices have jumped after fresh attacks in the Middle East shattered the relative calm of recent days. With the markets already rattled by AI and earnings concerns, could rising oil prices become the next major headwind for investors?
I think rising oil prices is such a difficult topic for investors right now because they are very much driven by geopolitical situation, by tweets by Donald Trump, and which side of the bed he's got off to in the morning, and then what he's going to say. And then that has become very much a norm now in the market. And although there is a clear precedent that how this particular situation works, escalation and then de-escalation. So investors are very much used to it. But in terms of a panic button, for us, that price level continues to remain $100 price level. Once oil prices jump above that one, that is a matter of a concern for investors. Until then, it is just escalation followed by de-escalation trade.
Naeem Aslam in London, always great to speak to you. Thank you very much.